All right, guys, back to work. Back to work. Hope you guys had a fantastic day. We got one more day left this week. And boy, we are lucky. We got some beautiful ranges on the charts tonight. Got some breakout pullbacks on my radar tomorrow. Some definite bear traps on my radar tomorrow. But we've also got some big news tomorrow. There's a couple big news events tomorrow morning, which means anything is possible. But don't you worry. I got an easy roadmap tonight. By the time we're done this video tonight, you'll have an easy roadmap to make money no matter what that news comes out, no matter what the markets do on Friday. And before we jump in, though, and talk my favorite trades here for tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section below. Thank you so much for tuning in, supporting the channel. Enough of the intro, though. Let's get ready for Friday. Boy, I missed you guys last night. Charts are all ready to go, though. NASDAQ is all set to go. NASDAQ triple Qs are ready. The E-mini and the SPY is ready. Boy, we got that beautiful CPI squeeze we talked about on Tuesday evening. Bears got squeezed on both the S&P and NASDAQ, and now it's pretty obvious, right? The buyers are trying to go back up and retest that big high overhead. So the direction's easy. The hard part is where are the best entries to get in on the way back up to retest these highs. We'll talk about entries on our tick charts here in just a moment. Before we do that, though, let's check our schedule for tomorrow because there's a lot on the calendar for tomorrow. We got PPI coming at 8:30. That's a pretty big news event. We got Michael Barr. He's the VP, second in command to Jay Powell. That's a pretty big event tomorrow morning. And don't forget that consumer sentiment number at 10 o'clock Eastern time. That also can move the market tomorrow. So 8:30 news, 9:10 speech, 10 o'clock news. All three of those could potentially be some big market catalysts. So also, too, don't forget tomorrow's a Friday. Now, as you guys know, we have a very specific Friday mindset. Fridays are not like other days of the week because as we get later in the day on a Friday, the market gets a lot illiquid, right? The volume dries up. My mindset on a Friday is to get into trades early, remove risk quickly, take a bit of profit, but I always like to leave a runner into the afternoon on Friday. Called my Friday mindset. We've had a couple big runs the last couple Fridays. Go back and look at the last couple Fridays. And you'll see Friday afternoons, they love to run. So my mindset, my kind of mental on Friday morning is get in early, take some quick profit, get rid of the risk. Don't close the position, though, to leave some runners because Fridays, they love to run. So keep that in mind for tomorrow. PPI number, right, Michael Barr, of course, and consumer sentiment. All three of those could easily be big market catalysts. And, of course, Friday mindset, right? Get in early, remove risk, take some profit, but let it run. And also don't forget, too, next Monday is George Washington's birthday. It's President's Day on Monday. We're off on Monday. We'll come back on Tuesday next week on the newsletter. Now, back to our charts. As we all know, the money is made on the charts. Let's now look at my favorite trades here for tomorrow. We'll go E-mini and the SPY first. We'll wrap tonight up on the NASDAQ and the triple Qs. And these are very different charts tonight. Usually the S&P and the NASDAQ are pretty similar, but these are pretty different. So I'll give you a reason to stick around all the way to the end and watch the entire video. Now, as I mentioned earlier, we know what's happening right now with that big run up late last week, that deep pullback off the CPI report, that beautiful CPI squeeze we talked about a couple nights ago, and now it's obvious, right? The buyers have one thing on their mind. They want to punch their ticket back up to retest the high. The direction is the easy part on this. The entries are a lot more difficult. Luckily, though, we have something for that, too. Let's now drill down to our tick charts. Now, tick charts make the entry timing a hell of a lot easier, if you want my opinion. This is a 7,000 tick chart you see linked up there in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA, in case you're tuning in for the first time. Now, there are really two really important clues on this chart right now. One is this trading range you see right there. The second, of course, is those major highs. We're not very far away now from those major highs. The most important clue is the range, right? When I have a range like this and we have a breakout of that trading range, we're going to see one of two scenarios, all right? We'll flesh those out here tonight. One scenario is we continue and look for a breakout pullback, right? Breakout pullbacks are pretty common. There are 3, maybe 4 ways in which we can structure the entries on on a breakout pullback. We'll talk about that as we go deeper into the video. But also, too, we get some big, look at this, we get some big overhead resistance. We got big news tomorrow morning. The second way that ranges work is sometimes they get stuffed up here and we collapse back down, and we can use what's called a pendulum swing to find a rotation and buy it off of that low. This is a little more difficult, right? There are a couple of ways we can structure that reversal off of that high. That is very attractive, but it's a little more difficult. So we'll talk about that in a moment here as well. So we get two scenarios, either breakout pullbacks, right, or that reversal off of that high. If this thing starts to go higher, right, if we start ripping and blow off topping to that high, I want to buy as low as I possibly can. So whenever we're going higher, and if we start really ripping going higher here, I'm going to look for what we call a bear trap. Bear traps are very simple patterns, and I like to use them to buy as low as I can. Now look at this pattern looks like, right? It's a higher high in price and move right below that low. We saw a bunch of these right there, right there. They're everywhere. Once you learn bear traps, you'll start seeing them pretty much everywhere on your chart. So if we do start ripping higher and squeezing through that top tomorrow, again, we got some big news tomorrow, right? We want to look for that bear trap pattern, that higher high in price, move below that low, because again, that will get you in buying as low as you can. Now, normally what happens in these cases is this becomes a measured move, right? We get one leg, two leg, and that's usually about as far as they go. We don't want to buy high, right? I don't want to buy high up here. So if we do keep on pushing higher, now I want to go out and look for that breakout pullback. I now look left. I think about these prior levels of resistance, and I can now use the top of that range for a breakout pullback area. Now, my favorite technique on these is draw a trend line off these highs, bring it down off those big lows, right? Find that trend line like that, and then look left, find that area, and that will kind of give us the general area of where I want that breakout pullback off of that trading range. Now remember, nobody has a crystal ball, right? So I don't know how far that pullback will go, right? I'm not going to blindly buy that breakout pullback. What I'd like to do is get this thing under the moving average, and you know me, right? I like to get under that 21 EMA. Don't pick the bottom, right? Because for all I know, it'll drop, it'll keep going here. What I'll use what we call a failure pattern, a two-try failure. What that means is I'll wait for the pullback, wait for the bears to try once, try twice, and once those bears are in, now I can use their stops to fuel the move going back higher, right? And buy, again, kind of a breakout pullback, right? Now, keep in mind, at this point, the market wants to go back up and take out that high, right? The way you get in on the way back higher is either a failure pattern like this or use one of those bear trap patterns I mentioned before to make sure we're buying as low as we possibly can, right? Think about this pattern right back there. They pull back, the bears once, the bears twice, we buy into those stops, right? They pull back, the bears try once, the bears try twice, right? And we buy into those stop losses. So if we do go higher here, kind of think this, keep this on your radar, right? It's that move higher, it's that bear trap going higher, high in price, trap below that low, and then don't chase it, right? Don't chase it. Once we get up around that measured move up there, then we start thinking, okay, now come back for me here. Pull back, draw that trend line off the highs, bring it back off that low. Think about where that prior high is to time the entry on that. And again, don't pick the bottom. Trap those bears below the moving average. One try, two try. Use that failure pattern we talked so much about in the free video classes. And always, 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 I want that bear trap on the way back up because I want to buy as low as possible. Now, every once in a while, what will happen is this thing will pop up and keep going and going and going, and it begins to grind going higher. Pop and grind, we call these in our trade room. We still want to look for that breakout pullback, but it'll be a little bit different now, right? Mark off a trend line off the highs, bring it down off those big lows, right? Look left. Think about prior swings, get underneath those prior swings, get underneath the moving average. Again, don't try to pick that bottom, right? We're not in the business of picking tops and bottoms. That's a rookie's game. Wait for the pullback, trap those bears in, and squeeze those stops, right? Again, failure pattern. And what I'm looking for tomorrow is that higher high in price and that that bear trap below that low. Now, one cool thing about pop and grinds is that the pop leg is the measuring leg. Okay, once we know how big the pop leg is, basically once we know before that grind starts, we can then use the size of that pop leg. We can project that now off that low, and that will give you a target on the way going higher. Again, on a range market, we're looking for either a breakout pullback, and again, I gave you guys a couple scenarios to keep in mind on that, or we look for that pop, right, and that run back down. Now, how would you sell this? What if it does get whacked right back down again? How would you short a bull market like this? Well, it's one pattern. It's called a crown reversal pattern. So let's say, for example, let's say we go running higher here. We run right into overhead resistance, and now we don't get the buyers continuing for a breakout pullback. Now what happens is the buyers come in and they struggle. They try to keep going higher once. They go lower. They try again. This is nothing more than one big bull trap. I call these crown reversal patterns, and they're fantastic ways to kind of pick that top during that pullback. Remember, it's a lower low in price, and of course it's one try, it's two try. You want that beautiful bull trap pattern we talk a lot about in the free video course. And where's the market want to go? It wants to go back into that range for target one, and back, of course, down to that pendulum swing for target two, and we can pick it up then, right, and buy it up off of that low, which we'll talk about in a moment. But first, though, let's slow down for a second, because I know that most of you guys watching right now, you know crown reversals, you know bull traps, bear traps, but if you're here for the first time right now, this might be a brand new language for you. Maybe none of this makes any sense. I look at charts a bit differently than I think a lot of YouTubers do. So if you're watching for the first time right now, I teach all of these patterns. I have hundreds of examples of these setups, all wrapped together, all taught in our free video classes. I'll put a link up here for you, upper right-hand corner. Grab that link that popped up there and take that free video course, because the strategy you'll learn in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best trades are going to be that day. Once we know where to look for the entries, then I'll teach you 4 of my favorite entry patterns to trigger the entry, give you an edge, and start making money on your own. Guys, the markets are way too good right now not to be making consistent profits each day. If you're missing the best trades each day, if you're taking too many losses, if you're struggling to qualify for a funded account right now, hit the link up top there. Take that free trading course. It's perfect for someone trying to make the jump into full-time trading. Also be aware too, if you can't grab the link up top there, I'll put all the important links tonight in the description of the YouTube video. I'll put the free class links down there. We trade together every day in our morning trade room. I'll put trade room membership information in the description of the YouTube video. And also too, I post a lot on Twitter during the day. If you're on Twitter or X, put my handle down there in the description. Give me a follow for updates throughout the day as well. All right, guys, that's where you can learn more about all the entry patterns, all the setups I'm talking about here in the video here tonight. So now we've covered, right? Now we've covered the breakout and the pullback and the way in which we can buy it on the way up, sell it on the way down, right? And buy it on the way right back up. Now let's talk about if the market rolls lower. If we don't go higher, right? If we go higher, I can buy nice and low. Right? If we go higher, I can buy nice and low off that breakout pullback. But if we don't, if all we do is pull back right now, which could easily happen, right? Remember, breakout pullback off that trading range. If we don't go higher before we pull back, what's my challenge? My challenge is this is a little bit too high, right? We're buying relatively high because, again, we're running into overhead resistance. So in these scenarios, I want to buy as low as I can. How do you buy low? You buy low with bear traps. So if we do pull back to the top of that range, again, remember, if we go higher and then pull back, now we're buying low. If we pull back right now, though, now we're buying relatively high. I want to buy as low as I can. To do that, we use bear traps. Bear traps are a higher high in price and a trap right below that low. It's a higher high in price. It's a higher high in price and a trap right below that low. That's all that pattern is, except I want to look for it right there, right? So again, if all we get is a little shallow pullback right now trap those bears in, get underneath that swing. You'll see a lot of examples of these in the free video class, of course, and squeeze those stops right for that run going higher. Then we might get that breakout pullback later on in the process, all right? So be aware of that, right? If we go up and pull back, that's a pretty easy one. But if we don't go higher first, we pull back, be careful. We're buying relatively higher here. Now, most important thing is if we end up all the way pulling back right now, this would really be my favorite trade for tomorrow, by the way. Pay attention now, very, very important. If we rotate all the way back down again, okay, that momentum now be very strong for the bears. This is where we want to look for. Again, we're not going to pick the bottom on this, right? I don't know how far that pullback will go. What I do know, though, is this is a horrible spot to be a seller. So if we come in, the bears try once and the bears try twice, I'm looking for that 2-try failure. And then as we rotate higher, because as we talk about in the free video classes, ranges love to rotate back and forth, right? Back and forth, because they're magnets, right? And it's overall bull market. If I can get the bears trapped in, use that failure pattern we talked about earlier to buy into stops, where does the market want to go? It wants to go back up and take up that high. How do you buy as the market rolls higher? You do it with a bear trap. Why? Because we want to buy as low as we can. So think about this scenario, right? If we do roll off of that high and end up all the way back into that range here around 5,000, which, by the way, again, I would love it if we saw that tomorrow. Get that nice steep pullback, buy nice and low. Again, don't pick the bottom, but trap those bears in, squeeze their stops, and then at that point now, it's simply trying to get as low as we possibly can there with the bear trap pattern on the way back up to retest the high. All right? Now, pay attention. Sometimes we get a strong rundown. We get a bear trap or a 2-try failure pattern, technically, right? A failure pattern off that low. We get that pop up, right? It pops up. We get our first target filled, 1-to-1. We move our stop up to point of entry, lock out the risk. But for whatever reason, the bears come in, they hold the underbelly of that range, and they whack it down again, okay? These are called double bottom retest. Remember, this momentum going lower might be very strong. And whenever we see a strong move down like this, we oftentimes like this, right? It'll move down very strong, pull back, retest, and then 1, 2, back up again. So think about the same thing, right? Same pattern again. Once they retest that low, do not chase this lower. Just because they retest that low, this is not a bear market, guys. It's an overall bull market. Again, that pullback off the high may be so strong that bears will short the underbelly of that trading range because ranges love to break out pullback like that. Now think about this. Anyone who sold that breakout pullback, where's their profit target? At the low. So a lot of times, professional sellers up here will take their profit at that low. Then rookies come in, 1 try for the bears, 2 try for the bears, same thing. Do it again. A 2-try failure, it pops up. I want to buy as low as I can, and we look for that bear trap entry on the way back up to go again. All right. So again, we may get that run down. We may get that 2-try failure, trap those bears in, but we may not get that big squeeze back up again. They may hold the underbelly of that range, retest the low. At that point, that double bottom is one of my favorite trades, and it's oftentimes one of the most lucrative trades of the week. Tomorrow's a Friday too, so leave that runner, right? Leave that runner, that 2-try failure into that bear trap. A lot of examples of that in that free video course I mentioned before, all right? Keep that in mind. Now, one more variation, then we'll grab the NASDAQ, all right? The NASDAQ is a little bit different than the S&P. What if we get that big drop now? And what if there are so many buyers like me just hoping for that big pullback? What if we don't get the 1, 2 back up again, right? What if this thing just V bottoms and boing, right back up again? What do you do in that case? You don't chase it. We want to buy as low as we can. But I can't get in down here, right? I don't know how far it will go. Nobody does. If this thing bounces hard off that low, you want to buy as low as you can. And usually these turn into one of these little pop and grinds, right? They V-bottom off that low. We draw a trend line off the high. We bring it down around that low. We look left, right, find prior swings. My favorite trade is in this scenario, my favorite trade, if I can't get in on the bear trap down bottom, what I'll do is I'll mark off that trend line, find that channel, and this could be any entry pattern we teach in the free video course. I just want that first test. That first test is the best test, right? We saw one back here, right, with that V bottom right here, right? We V bottomed off of that low, boing, right? We start grinding, going higher. What do? Draw a trend line off the high, right, off that low, and you want that first test, right, off of that low. All right, I want that first test. Now in this one, right, it wasn't a trap. It was a 1-2 failure pattern back up, right? Same idea. If we roll, again, major resistance overhead, big news tomorrow. If this thing gets crushed and runs lower and V bottoms back up again, do not chase this thing going higher. Once that little voice in your head says, come on, dummy, get in. No, right? Do not chase after it. You don't want to buy high. You want to buy low. You mark off those highs. You mark off that low. You look left. Again, ideally, you want a prior swing. Sometimes we don't get the prior swing. Right? Sometimes all we get is that sharp pullback. We get underneath that 21 moving average. The bears will try to short this thing back down again. Bears once, bears twice, and squeeze those stops running higher, right? You know where the market wants to go. It's an overall bull market, so leave that runner on a Friday. All right, guys? And again, if we do start dropping, what's the entry pattern? The entry pattern is that bull trap, 1 try, 2 try. We call them crown reversal patterns, right? It's a lower low in price and a trap off of that high. And also to keep in mind, right, that is a counter trend trade. So for most people, it's a quarter size position. It's a half size position. If you're still not consistently profitable going with the trend, it's a 0 size position. Let's get making money first, going with the trend. All right. So now we got a good game plan now, no matter what this market does. And again, nobody knows what will happen in the wake of that PPI number, those big news reports tomorrow morning. Let's keep going. How about some NASDAQ? NASDAQ's getting lonely over here. The NASDAQ's very similar to the S&P, but you'll see in a moment it's got some wrinkles to it that the S&P does not. Again, big, nice, strong run up. Anytime we see a strong move in one direction, we expect a two-legged pullback and a retest of the high. Got that beautiful CPI squeeze we talked about, and now we know exactly where these buyers want to go. They want to go back up and punch their ticket back up at that high. That's the easy part, right? The hard part is the timing of the entry. Tick chart now, 4,000 tick chart you'll see in the upper left-hand corner. There are 2 very important clues, similar to the S&P, but very different than the S&P. The most important clue is this trading range right here. Right? Anytime we see a bull market into a range, we know that ranges love to rotate, right? They love to rotate off the low and do what? And pendulum swing in the opposite direction. We know exactly where the buyers want to go right now. They want to punch that ticket out 18,030, right? 18,020. It doesn't matter, right? They want to punch out that pendulum swing. The problem is we're running into this breakout pullback zone, which is the underbelly of that range we saw. What was that, right? 2 weeks ago, right? Week and a half ago, right? Before that CPI drop on Monday. Yeah, and the last week, right? This area right there, again, is the underbelly of that range we saw at the end of last week. You should know this by now. Ranges love to break out pullback. So even though we're very bullish right now, this could be a very significant area of resistance, could whack this thing right back down again. It's a very important part of the analysis here for tomorrow. So knowing that, right? Knowing that, let's now go over now kind of what our game plan is, right? So for example, we know that ranges like this, right? When we see a range like this, we might go up and breakout pullback. We get a pretty good idea of how to do that based on the S&P, right? However, we may not go up high enough to get that breakout pullback. It may get whacked right back down again. Now, in this case, a couple areas here, right there and right there to buy it back up. We may get a shallow pullback, we may get a deeper pullback. Okay, now a lot of these patterns are the same as the S&P, but let's now think about how to do this, right? So if we end up getting that squeeze running higher, which is very likely at this point, unless we get some news interrupting us tomorrow morning, if we go higher here, what's the entry pattern, right? We're going higher like that. What's the problem? Don't buy high, right? Buy as low as you can with what? With a bear trap, right? Higher high in price. What happens? Oftentimes, it's a measured move. Okay, measured move. Again, it's a bear trap. Then what do you do up here? Do you chase after it? No, right? You buy a what? A breakout pullback, right? You look left, you find those, what was prior resistance, that becomes prior support, or that becomes support now. We get that nice deep pullback. We don't pick the bottom on this, right? We don't know how far it will go lower. What we do is we trap those bears in. We use that failure, that two-try failure into that bear trap pattern we mentioned so many times already tonight, right? Higher high in price, trap below that low, and we go out and retest that high, right? Two-try failure into that bear trap pattern. Target is, of course, back up to retest high. Again, think about now a trend line off the high, right? Off that low. Think about that giving you the idea now of where that entry location will be, and then time the entry by trapping sellers, rookie sellers, below the moving average and squeezing their stops, right? So that's the game plan if it goes higher, right? If it goes higher. Number two, if we go up and we start seeing these buyers struggle, they try once, right? They try twice, lower low in price. That's a bull trap pattern, a crown reversal. That's always going to be the way in which we sell at resistance in an overall bull market. And again, if you're new to this stuff, stay away from those, right? Because again, they're not going to be as reliable as going with the overall trend. The big difference here on the NASDAQ, though, is if we get a shallow pullback. I mentioned earlier, you see that little channel I had marked up, right, like that. We may not get a run all the way down to that area. I would love to get a deep pullback right now. We may not get it, right? We may only get a shallow pullback below that prior low right there. Now, what's the problem though? The problem is we're not buying low at that point. So how do you buy a shallow pullback? You buy a shallow pullback with bear traps, right? Because again, you're going to buy as low as you can. A bear trap is pretty easy. It's one try for the bears. It's two try for the bears. It's a higher high in price. Why? Because sellers want to sell high. Rope those bears in. Buy as low as you can. Get underneath that prior swing. In the video course, you guys will learn about entry signals on those traps and squeeze those bears from there. We need those stops to get squeezed because we're not buying very low, right? We buy shallow pullback traps, right? Now, next step is if this thing goes up and gets whacked back down again, what do? You don't pick the bottom on it, do you? No, you trap the bears in, right? We go in, the bears try once, the bears try twice. Once they're committed, squeeze those stops back up again. It's an overall bull market, right? Buy nice and low by trapping in the bears. And remind me again, if we do run higher here, how do you jump in again? How do you add to your position? You add to your position with a bear trap, okay? And remember, I know this is a broken record. I know we repeat this over and over again, but that's what trading is. That's what trading is. It's the same setups in slightly different ways to use them every day. Once you find the golden cow, right, or the golden goose, you just keep on milking it, right, until it stops working. This stuff works fantastic. Remember, a lot of times we get these deep pullbacks, right? Deep pullbacks. Again, we get our two-try failure. The price pops up. We get our 1-to-1. But for whatever reason, the strength of that move down is so strong, it holds the level of resistance now. What was support becomes resistance. It retests that low. That becomes your double bottom, right? Once they retest the low, the bears who got in short up here, they take their profit down here, and now in come the rookies, right? The rookies come in, they're chasing after it, they're way late, they're shorting way too low. We can squeeze their stops with that failure pattern into that bear trap pattern again. Same thing, right? Over and over again. Again, remember, leave that runner because it's a Friday, right? And if we don't get either one of them, you know what I mean? If we roll lower and we boing right back up again, you know what to do, right? Don't chase it as it begins to rotate, kind of grinding higher here. The trend line off the highs, trend line there off that low. Look left, right? Remember, whatever pattern you get on this, don't miss that first test, right? Don't miss that first test. It could be a bear trap, like I was showing you here. It could be a failure pattern, like I showed you earlier on in the video. The bottom line is, once we get that entry, you know where the market wants to go. It wants to go right back up to retest the high, so leave that So leave that runner. All right, guys? And again, as we're getting that pullback, right, during that pullback, think about that crown reversal pattern we mentioned earlier, and I'll let you decide whether or not your experience level is there yet, right, to take that short going against that trend. All right, guys? That's the game plan for tomorrow. We covered a lot in the video, but again, there's a lot of variation, a lot of potential tomorrow because of all that news. Now, if you want to trade it with me, tomorrow morning, 8 o'clock Eastern time in our trade room, I can't think of any better way to learn to trade this stuff than to do it with me every morning in the morning room. We open up tomorrow morning, every morning, 8 o'clock Eastern time. I'll put all the important links tonight in the description. If you're watching for the first time right now, I would definitely recommend start with the free video classes. Get your feet wet, and hopefully sometime soon we'll see you trading with us in the morning trade room. Any questions, any challenges getting access to our free video classes, any issues at all, don't be a stranger. Call the office, use live chat. If you need help, I'm here to help out every step of the process. Don't forget, Monday is a holiday. Be back next Tuesday and resume our normal schedule. Been a great week so far. Let's finish tomorrow strong. Stay patient. Make the market come to you. Keep that Friday mindset. Any questions? Hit me up in the comment section below. In the meantime, be well. Be nice to each other out there. Make some money tomorrow. And we'll see you guys after the holiday. Be well. Adios, amigos. Bye-bye for now.